Yo guys, welcome back. Today we have an awesome guest, but before we jump into that, please smash the likes and subscribes for our awesome guest. We're going to be having a great conversation here. Very stoked to have him. Real quick, shout out to our sponsors, Bybit, Market Cypher, and BingX. You can find their links in the video description below, along with our guests. Gareth Soloway, I have his link there. Go subscribe to him. So Gareth, great to have you, man. I'm sure everyone knows who you are, but if you want to give yourself a little intro, shout out anything you're working on, please go for it.
Well, thank you, Tom. It's awesome to be here as always. I love talking with you and talking crypto with you. And basically 20-year trader. I'm mostly in stocks and commodities, but branching into crypto over the last 5 years or so. And the beautiful thing about it is I'm a chartist. I'm a purist in that way. So I don't care what the news is. I just trade what the charts are showing me. So it works for stocks, commodities, and crypto. And it's able, I'm able to basically generate alpha that way. So the only project now that I think everyone should check out is verifiedinvestingeducation.com. It's basically everything I know in a 3-course series. And, it's kind of my legacy, right? I could die tomorrow. I won't place another trade, but people can still learn how to do everything I do.
That's beautiful. It'll outlive you. It's beautiful. Well, actually, you know what, man? I wanted to also start this with last time you were on, we had some differing opinions on price action, and I'm going to be the genuine, honest guy that I am. I think you won that one. I think you won that one. Price is now down in the shitter, and you're definitely looking for lower targets. So let's just get that out of the way. But as a chartist yourself, that's how it goes. Can't always be right. Is what it is.
Yeah, and I mean, I think it's so crazy how. You look at what happened with FTX. A while ago it was Terra Luna, Celsius, Voyager. Go on and on, but there's just black swans everywhere popping up. It's almost becoming a common thing, unfortunately, in the crypto markets. But let's hope that, and this is what I'm seeing now, is I think that this breakdown is the beginning of the end, meaning the beginning of the end of the bear market. Where I think that, yes, we're going to go lower, but wherever we bottom here, that's going to be finally the bottom. And usually that in markets, whether it's the stock market, that final panic, the one where, you saw big money losing on FTX, you saw small money getting crushed there. That's usually the end where people finally give up. And that's what we're getting to at this point, at least starting to see.
We have to be on the way, right? We have to be in that direction. Yeah, you made a good point there. I'm going to say, I live in this space, crypto, full time. I know you're in different markets and such. This is my only focus, and I have lost track. I have lost count of all of the things that have happened in a row here. Like that's the whole Celsius thing was in June, right? And that's when we hit down and we broke 20, and everyone was like, oh, that was Celsius liquidating. And now we're in more trouble down here with FTX. I definitely wanted to ask you if you have any thoughts about FTX, whatever you're comfortable with. And also someone wanted me to ask, I think it's a great question. Do you have any exposure to not just FTX, but any of these platforms or, groups? Funds?
Yeah. So lucky for me, I've always been a purist in terms of I haven't been scared of regulation, right? So my accounts are at Coinbase, Kraken. I think Kraken does 2 audits a year.
Yeah, I love Kraken.
Coinbase is publicly traded as a stock, so I think there's some SEC oversight. So it makes me feel a little bit better. But one of the things I always say is that if you have, it doesn't matter if you have 5,000, 10,000, or 100,000 or $1 million. It's smart to kind of take portions of that and spread it around different exchanges, because if one goes belly up, at least you're only losing 10% or 20%, not 100%. And it's just basically risk management. It's crazy in this day and age that you have to decide, it's not a matter of does Bitcoin go up or down or crypto go up or down. It's, does my exchange basically take my money and run? Yep. That shouldn't be the way it is, but it's crazy with FTX. It really is. I think this likens back to Enron for me, to WorldCom. Some in the early 2000s, there were stocks that did some shady things and they went bust. And it's kind of a growing pain for an industry. I think it's something that we have to get through. It's going to force regulation on the industry, which I know everyone hates, but at this stage, I think we all have to admit we need some sort of clarity, some sort of rules, so that investors feel safe. Really, as an investor, your only concern should be, is my crypto going to go up or down? Not am I going to wake up tomorrow morning and my money's vanished, right? And that's where we have to get to.
Well, I'm glad to hear that you didn't have, any meaningful exposure in, directly. I know we did a little poll in my last stream, and it was basically, did you use FTX at all? And if you did you lose assets there? And I think we had about 700 votes, and it came down to maybe 6% or less had assets on FTX, which my heart goes out to them. That's awful. But, I don't want to downplay it, but that was a kind of a weird thing for me, is they jumped into kind of this number 2 spot, and I just didn't meet anyone who really used them as a platform. And I didn't think anything of it because, like everyone else, it was like, we don't have any reason to suspect them. They have all the billions and billions of dollars. Everything seems legit. No one, no one's raising the red flags here. And then out of nowhere, kind of just chaos. We had, what is it? The Genesis news today. I actually am not read up on it yet. I know they have some association with Gemini. I don't know if you're familiar with it. I think that's pretty breaking.
Yeah, I just briefly heard about it today, and again, that's the Winklevoss twins, right? That they're involved over there, and again, this is the thing, is like it's basically when they say when the tide goes out, that's when you see who's naked and who's wearing a bathing suit, right? And I mean, when Bitcoin and crypto's collapsing, it's going to show the bad actors. Anyone who took over leveraged risk is going to get kind of hung out to dry. And one of the things you always remember, and I learned this from stocks, is like, if you're in a stock that promises too much, and a lot of these crypto exchanges, they're like, oh, we'll pay you, you invest in this coin and you're going to get 20% or 50%. There has to be a point where when the merry-go-round stops, you have to get out of those scenarios because it's too good to be true. And I think that's what we're seeing now, is a lot of these players were just promising too much.
Absolutely. They were promising the moon.
Yeah.
The moon and more, really. I mean, I remember I made an account on FTX because of the 10% APY on stables. And at the time, that was totally reasonable because that's what everyone was doing. Never touched it, though. I don't know. A little bit of laziness. You know what's funny is laziness has really protected me in crypto more often than I'd like to admit, where it's just like, I didn't get around to it. And, maybe that's something, maybe that's a learning lesson. It's about kind of fighting that jumping into something that's too good to be true. For sure. I don't want to go for it.
I was going to say, and it's what's so interesting now is, so when we were at 65, 69,000, it was all about, oh, I got to go long. I got to jump on this train. Right. And now what you're seeing is as we're down in this 16,000 range, and my downside target is now about 9,000. A lot of people are like, well, do we go short, right? Do we go short now down there? And what I say to them is, if you took the chart of Bitcoin and you flipped it around, it's basically like you'd be buying at 60,000 now. I mean, essentially, right? 16,000 to 9,000. So you have to say, was that a smart move to buy at 60,000 or 65,000? The answer was no. Well, then the same thing to me. Yes, I still think it's going to go a little bit lower, but you're so close to the bottom, in my opinion, now, it just doesn't make sense to short it. If anything, I'm starting to kind of slowly, like every 2,000-3,000 down from here, I'm starting to accumulate Bitcoin.
Makes sense to me. I actually just flipped it. I never did that on the monthly, and I am seeing some eerie similarities here. You have like the high at 65, and maybe 69 isn't here yet, but that's looking kind of pretty similar to that 2 peak top, just the inverted monthly chart. Very basic TA there. I'd agree. I did say, I was talking about this yesterday, and maybe you have some insight. I know you're not a CPA either, but people were saying about, should I sell and blah, blah. And I said, well, I think, we are closer to the bottom. I'm not going to try to call it again. I've been wrong. But one thing that people could look to do, if they especially did a lot of buying this year on the way down, you could look to do some tax loss harvesting here because you're probably in the red. I don't know. Is that something that you've done in the past or plan on doing this year?
No, for sure with stocks more so. I have been very nimble in crypto on the way down, just kind of buying in and jumping out a little bit. But it definitely is. I'm not sure about the rules in crypto. How long do you have to? Is it the same as stocks? You have to wait 30 days before you repurchase.
I don't believe.
Yeah, so I'm not sure what it is, but just make sure you talk to your tax professional. But if you made 100K and you have 100K loss, why pay that tax if you can avoid it?
Exactly.
Just have it washed, and then back in January, whenever you're able to buy back in, just buy right back in with that same amount. So, and I don't think price is going to go that crazy where you're going to get a materially huge difference in price between, let's say, December 31st or whatever and January 2nd or whatever it is.
Yeah, agreed. I kept saying I'm not a CPA. Make sure you
Yeah.
check it out with your
Especially in
jurisdiction.
crypto, right?
I
Because
don't
crypto,
think
you
though
don't
that
know.
there
I don't
is.
even know the tax rules on crypto, to be
Yeah,
perfectly honest.
well, I think it's very similar to stocks. I think there just isn't really the accredited investor aspect, the limited number of trades. To my knowledge, I know that they were going to change this, and maybe that's next year. That's why I said don't listen to me, ask your CPA. But to my knowledge, there is no time frame that you can, in theory, sell by and be done with it. But again, don't take my word for it. Check it out. I just think it's an interesting concept, and I think it's actually nice because it gives a little bit of maybe some positivity to people who are very down. I got some affiliate payments in Bitcoin throughout this year, and all of them are underwater. And so I'm going to talk to my CPA, and if that's kosher, you're right. Why would I pay? If I received this at 40K, 48K, why am I going to pay 48K on it here? I might end up having nothing. It might end up just that all going to taxes at this point because it's down 60%.
Yeah, for sure. And that's a good way of thinking about it too, right? So on 100K, let's say you'd have to pay 25,000. I mean, depending on the tax bracket you're in.
Mm-hmm.
But if you can just exit one day and then pay zero and then buy back in January, you can avoid it. But again, like you said, talk to your financial accountant. Don't assume that we know what we're talking about, because I know nothing about it.
We both have accountants that do this. We don't. Yeah. We're not the ones making these calls. I love it, man. This is why I was like, all right, we'll do like 30 minutes. I know we could go on for hours. So let's hit the hard stuff, man. What are you looking for? I know time frames are always really hard to do. But just in general, kind of, you said 9,000. I'm curious, where does the 9,000 come from?
Yeah. So a couple things on the charts. And so one of the things that I've been recognizing is that the FTX collapse is very, very, very similar to when Lehman Brothers failed in the financial crisis, right?
Okay.
We were already down significantly in the stock market, and then we saw Lehman Brothers fail, and it was kind of like that big blow up in the industry. Mm-hmm. In this case, it's an exchange, but you could argue that the exchange is the banking side of crypto. So it makes sense that it's very similar. You saw big money get hammered when Lehman Brothers collapsed. You're seeing big investors, big money get hammered in this scenario. The third biggest exchange it was, and Lehman was one of the biggest banks at the time. So the same sort of things are occurring. And what I did was I went back on the S&P 500 and I said, okay, from when Lehman Brothers collapsed, and we're going to go back to 2008 here and take a look. All right, so here it is. Here's Lehman Brothers, and it basically was the last final collapse before the markets bottomed. And so I said, okay, what was the time frame? And if you look here, it was on September 15th that Lehman collapsed, and the markets bottomed March 9th. So that was approximately 5 to 6 months. So in my mind, now I have a kind of a potential game plan for that to bottom out. Now, interestingly enough, the markets bottomed out on the S&P in 2009 because the Fed started printing money, right? Well, you could say, well, what would be the equivalent of that in the crypto markets? Well, the Fed's not going to print money. We know that. Not until inflation is under wraps. It's certainly not going to happen by early next year. But I do believe that the equivalent for crypto would be getting transparency and regulation, where you're going to have money finally feeling safer to enter the crypto sphere. And so it's very likely that with big investors, in fact, Kevin O'Leary was saying this the other day in his interview. He's like, I'm going to go to Washington right now and demand for regulation, because he got burned.
Yeah, he did.
Yeah. And so to me, I'm like, okay, well, the way crypto goes up is if you draw a lot of money in. The only way that's happening without the Fed printing is with regulation, which creates transparency. And so the idea is within 5 to 6 months, I do believe that the government will have a framework, that Gary Gensler will have a framework for this. And I think then money will start to flood back in on crypto. Now, in terms of my target for 9,000, what I did was I said, okay, if we look at the crypto market, right? This is where this is the S&P. So this was the high on the S&P at around 1,600. When this occurred, we were around 1,200. And then how much further did we drop? We dropped to about 600 and change. So to me, it gives me a framework saying, okay, 40 to 50% downside from here. That puts us at around 9,000. I also think that the 10,000 break is going to be a back-breaking event for a lot of individual investors, which is usually how bottoms are formed when they finally throw up their hands. Psychological.
Yeah,
right?
we lost a digit. It's over.
Right.
Yeah.
So they're going to say, oh my God, it just broke 10,000. This is a catastrophe. And they're going to generally, people will be triggered emotionally to dump at that point, which oftentimes marks the bottom. So that's where I'm coming up with it. The last thing I want to share with you guys is, everything comes back to charts with me. And interestingly enough,
we love it.
Yeah. Interestingly enough, if we take this trend line, let me put a trend line on here. If we go to the pre-lows before the 2017 highs, and we put a line there connected to through the collapse lows of 2018 and 19, it coordinates perfectly with the 2020 COVID low. And guess what price that is? Right now, it's about 8,600. But in a few months, in let's say 4 or 5 months, it's probably around 9,000 because it's an upsloping trend line. So then you have a trend line, which would be basically taking crypto back to this longer term trend line that would also match up with that cycle, with that correction. So for me, again, listen, just like, I could be so far off, it's not even funny, but all we can do in the technical analysis world is look at what probabilities are telling us, look at history for guidance, and do our best to make decisions.
Absolutely. And that lines up pretty well. Of course, I'm going to be a perma bull. I always want the bottom to be in. Yeah, I've been wrong. I have to keep saying it just because I don't want people to think I'm one of those people that's always right, because those people aren't real. But that does line up pretty well with, I'm looking at 13.8. That's the 2019. That was our huge resistance. That was even the resistance on the way up in 2017, 18. Could find support there, but if we don't, the next target I'm looking at, this is why I asked about 9, is I'm looking at like 10.5 to 10.7. I do agree though with the psychological beating of losing that digit. Nothing is more capitulating than losing a digit. Same with that's what I was thinking, 100K on the way up. Nothing is more euphoric than adding a digit. I thought that's when we were really going to get caught. Didn't happen. But something interesting that I wanted to show you, I'm kind of curious your thoughts. So just throwing on the weekly, and of course these are moving averages and they can give us whatever we want, right? Kind of throwing on the weekly to the BLX chart, something that I found really cool. So we have the 100, 200, 300, and 400. And what we see is the 200 spawned. I like to say spawned, it's a 200 week of trading. That is pretty much where the 2014-15 bear market bottomed out, right? Hit that 200, bounced, went back up. In 2018, we fell to it, and in 19, we touched the 300 weekly moving average. So just going here, I'm just having some fun with the charts, hoping to create some hopium of some way. Well, here we are again in the next cycle. Where's that 400? Right down here. And here is, this is some good hopium. Where is it? It's exactly at 13.8.
Interesting.
There's no guarantees. I like it too.
2, 3, and then potentially the 4. I like how those numbers are aligning, right? That's
and
very
then
cool stuff.
To be over 13.8, if it was over 10.5, that would make me much more confident in 10.5. But to overlap with that, really critical level. And then also to just have kind of the series of cascading longer weekly moving averages. I think it's a cool thing. I don't know. I know as much as the next guy if it's actually going to be the bottom. But that gives me some confidence that, if we're here, likely to find support. I'm definitely curious. What are you thinking? So say we close this quarter red. That's actually going to be the first 4 consecutive red quarters, I think, for Bitcoin ever. My brain is, where's the dead cat bounce? Where's the rally? Where's maybe the failed high? Do you think we're going to get that? Or do you think maybe the markets with all these kind of collapsing exchanges and funds, do you think maybe we're going to have more of a capitulatory event where it's just down, down, down? We get that Band-Aid rip at, 9 that you're looking at. And then what? Only up? Obviously not only up, but, kind of maybe no dead cat bounce? Because in my opinion, we really haven't seen shit when it comes to that.
That's the amazing thing. From 69,000, there's really hasn't been a significant bounce, right? Really the biggest one was from about 33 back to about 47, which percentage-wise sounds big, but in Bitcoin terms, it's not that big.
It's nothing. Right? It's it's not even like a 0.5 retrace. It's right, exactly. It's just in the muck, right? Oh no, it was a 0.5 exactly. Maybe I should have caught that.
0.5. There you go.
God,
amazing how that works, right?
Still small though. Still small for Bitcoin.
I'm kind of in the camp where I do think your 13.8 makes a lot of sense. I've been isolating down 12, 13 and change as at least an area for a major bounce, maybe back to 17, 17.5, maybe 20. So I again, percentage wise, that's a big bounce. But I still, yeah, it'd be interesting to see, is that the low? And one thing I should tell people is like just because I see it at 9,000 doesn't mean I'm going to sit on my hands and not buy any Bitcoin down to 9,000. To be clear, I've already started my HODL position, right? So I basically know, and this is from being a pro trader, and Tom can vouch for this too, is like, you never know where the bottom is, you never know where the top is. The best thing you can do is like do what I call shotgunning, where you shotgun it, meaning you spread out your buys in the general vicinity. And this way you get some exposure. If it doesn't go to your low, at least you have some exposure. So for me, I basically took X amount of money and I divided into six, 1, 2, 3, 4, 5, 6. And I bought my first 1/6 of that. So one portion of that money, I'm already in Bitcoin as a HODL position. And basically when it gets below 15, I'll do another one. If it gets down to maybe 13 or 12, I'll do another one. At 10, I'll do another one. And the idea is if it doesn't get to 9, which is my target, that's okay, because I've got lots of exposure by the time it gets down there. If it goes to 7, I buy a little bit more, and then my dollar cost average is low enough. So I just want to be clear is that, even pros, you can't be like, I'm only going to buy at this level. If the thesis for Bitcoin is still strong, then you kind of start to say, okay, it's low enough now. I mean, now you're at 16 where, yeah, it could go to 9, and that's a big percentage drop from 16. Mm-hmm. But in the scheme of 69 to 16 or 9, it's not that much anymore.
Absolutely, man. This is why we were talking forever. Guys, you should go check out the last time we spoke, because we're in like different seats now. Gareth was definitely looking for lower. I was definitely like, Gareth, you're crazy. It's not going lower. But it's interesting, your rhetoric here, because now you're talking about scaling back in. We did talk about that. That's why I loved you, is because exactly, we have the same mindset. It's never all in or all out. It's all just kind of layering in, layering out, because you're never going to catch the bottom wherever it is. If it's at 13.8 or 9 or if it's in now, you're never going to catch it. But you can guarantee that you're not caught without or with a total bag by doing it in steps. Is there a reason behind kind of 6, or is that just where you're comfortable, or
yeah, I think it's generally where I'm comfortable with. I don't think there's anything significant about it. Like, I wouldn't do a half position, because that doesn't give me, like, I guess
too much.
To put it in phrases, when I get in positions, sometimes I find that like my first level doesn't work, my second one, my third one, and by 5 or 6, it's pretty darn lucky, pretty good odds that I'm going to get that technical bounce. So I guess that did. But I mean, whether it's a 5th or a 6th position, that's kind of the zone that I'm in. It gives me enough ammo on the sidelines where if it does get, I mean, if it gets really, let's say there's a next situation with someone else like Binance, and I don't think there will be, but
I don't think there will be, but
yeah, but if there was, then I'd have enough ammo to, on that flush to kind of add to the position.
Yeah, my goal, doing the exact same thing. I was very successful in March of 2020. Felt like luck, but doing the same thing. What my kind of mindset is I'm going to layer these down, and I'm going to put orders that like at prices that are going to scare me. Like, what price would scare you right now? Like, what would you be like, oh my God, it's over? Yeah. Throw an order there. And then if it goes there, you just filled at like a price you never thought was possible. And that happened to me in March. I'm curious about the way you layer. Do you do them all as like equal orders, or do you weight them down, or is there some kind of other method that you use?
So I do equal orders, because my biggest fear is if I did a really tiny amount at the first entry and then it doesn't go any lower, I'm like, well, I'm in so little bit and now it doesn't even matter. So I just try to keep it consistent. But I do know some people that, they'll do the smallest order at the beginning, and then as it goes lower, they'll do bigger and bigger and bigger. And I think that's a fine way to do it, as long as you stay consistent, right? You don't want to, change the methodology of what you're doing, because that's where, when we start to change what we do and we try to second guess ourselves, that's where we always screw up.
Every time, I just talking for myself, every single time I've made a plan and then changed it in the moment, it has been the wrong move. And I've looked back and been like, if I had just done exactly what I had spent all that time planning and like setting orders, I would be in such a good spot. We all go through the same thing. If you guys aren't getting that, we all go through the same crap as a trader. Like, you really,
And I think also you want to just remember that like the market will try to make you do the wrong thing. Like let's say you buy your first one sixth, and then all of a sudden you get a bounce, and the market's trying to lure you to the point where it's like, all right, let's get him to put all the rest of his money in, thinking it's the low. And as soon as you do that, then it goes down, and you're like, damn, I should have waited and done a sixth and a sixth and a sixth. I mean, that's the way markets work. They're geared to mess with your emotions to the point where you make the wrong decision.
Absolutely. I made a little short video. I'll have to send you the link. I've been working with an editor to make awesome little educational short clips, like 40 seconds, awesome animation. And one of them is about that. And it really feels personal, doesn't it? When you're trading, especially at the start, you're like, this market is like targeting me, but it's not targeting you. It's targeting that shared emotion that pretty much everyone is experiencing at the same time. And I think becoming a real trader or like expert trader is really just when you can get past that. And it sounds so simple and too simple to be true, but it's like when you can just get past that and work more mathematically and just say, all right, I'm just going to do these 6. I'm going to layer them in this way, walk away, like that's it.
That's it.
You've cut the emotions out.
It's so true about that. Is because a lot of people are like, oh, it's a scam. It was the institutions. It was the big money trying. And then the reality is it take millions of people, and then their emotions and their emotional swings are what do this, right? I mean, it's like a mass emotional kind of bubble that everyone's living in, and then that's how it works. And you're right. You have to get to that point. The pros are like robots.
Yep.
They are unfazed by everything. They just kind of do what they're going to do no matter what. And as soon as we let emotion creep in, that's where we get screwed, frankly.
Yeah, a lot of people try to reject that, and they're like, "Oh, well, I don't get emotional. I wouldn't do that." And of course they do, but I like, kind of as an example, is imagine you're in a crowded room, right? And I don't know, someone yells fire, and then people start freaking out. You're gonna, like, even if you aren't freaking out like they are, your heart rate's gonna elevate. You're gonna experience some fear. You're like, why are all these people afraid? That is exactly like a market. You're in a room with all these people. They're all experiencing an emotion. It washes over on you a little bit. And if you can be that rational person who's like, well, wait, I don't see any fire. I don't smell any smoke. Like, or maybe we're outside, there's no fire inside. We're outside. Like, that rationality or kind of that roboticness is the key to trading. And it's not exciting, but it is.
And the thing is, like you could, like, literally we could, and you and I could, we could teach people how to read charts, fib retraces, bottoming tails. It's the one thing we can't teach is like discipline and emotional control. That's something that the individual has to deal with on their own. And I think the biggest thing too is, like, if you ever want to, for those people watching, like, you want to become a pro trader, you want to become someone who's a robot, it doesn't just like start where you go to your computers and you're like, okay, I'm going to be a robot. You actually have to employ some of these discipline techniques at home, like in your everyday life. And what you'll notice is it starts to carry over. Just like any type of becoming an expert in anything takes more than just like showing up at a job and becoming an expert. You got to work on it through the whole thing. And I think that's what people don't understand too, is that, are you someone who sleeps all day and you're like, oh, I'll do it later? Or are you like, okay, I'm going to make a plan and I'm going to follow through with this plan, do my dishes, do my laundry, do this, so it starts at home for sure.
Oh, it really is. It's a whole mindset, and it's just a wild journey. Like, it is all about becoming a robot. I wonder if there's some kind of, and I'm not like promoting a bot, but like some kind of, can someone make like a bot for beginners where, I don't know, so like it's removing their emotion in the sense that like it's deciding and like not letting you change your plan. But then, I mean, you run into other problems, but like something like that seems like it might be helpful for like day zero traders, just to watch trades go through and be like, oh, look, something works. And then maybe latch onto the idea. I don't know. I'm just throwing something out of there.
Yeah, no, I like it. I mean, I've often thought about like strapping a room full of traders that I was trading with, like, heart rate monitors, and then like basically have it up on a screen where, if they're entering a position and their heart rate starts to elevate, then it's like, nope, you're going, that's too heavy. You're putting too much. You have to bring it down to where you have no emotion, which means your heart should not blip up at all. And it's just interesting. I've also thought about, like, what if there was an electric shock associated with it? Like, you got like a little bolt of energy.
Yeah, those are not, this sounds crazy, but these are actually really good ideas, and they might solve like really complex questions. I like the heart rate thing. I would participate in that, because you'll just see that flat, cool heart rate, man. I'm just putting them, I'm setting them, and I'm like, I don't care. Like, it's not like I don't want to win, but I know that it isn't about winning this trade. It isn't about winning the next trade. It's like, I just need to continue to take like what I think are advantageous or probabilistic trades and just keep doing it over and over again.
And I think one of the biggest things about getting emotion out of it is like even for me, if I put all my net worth in one trade,
oh, you're gonna freak out.
I'm gonna be emotional. Like,
I'm gonna freak out for you.
Yeah, right. So it's about knowing where that level is, where you can put money in, where it's not going to create that emotional response. And then what you're going to find is you're going to make the right decisions based on the charts, based on lack of emotion. As soon as you go above that, you're going to be like, oh my God, oh, what's going on? Which, like, is Bitcoin going up or down? And then that's where you just lose it. You might as well just give your money to charity at that point.
Gareth, I think you should, maybe as part of your awesome course, I'll have to check this out at some point. I'm saying maybe we should ship out EKGs to people to wear, and that's part of their trading journal. This sounds absurd, but actually now the more they think of it, the more genius this actually sounds like, because that's important data. And you could, I guarantee you, a new trader wearing some kind, maybe an Apple Watch instead of EKG, logging their trades and logging their heart rate at the same time, guarantee there is a correlation of their heart rate being up and them losing trades. And I guarantee that correlation is strong.
I bet. And yeah, what would be awesome is to like have a software that overlays your trades with your heart rate. So like, at what time of day did you make this trade? And then what does your heart rate do? And then when did you exit the trade, and kind of seeing all that. It's just a super cool idea, man. I mean, I don't have
going into business, Gareth?
Yeah, I know.
All right, let's do it. We'll partner with Apple.
I like it. There you go.
I like it too, man.
The Apple iTrade.
The iTrade. Well, we can't give away any more secrets. At this point, it's all proprietary.
You have to pay us $10 million if you want it.
Yep. This is a bajillion-dollar idea. Please, everyone in the crowd, don't steal it. Please don't steal it. Let us patent it. That's awesome. Dude, I really actually like this idea more than I should. We've been on for about half an hour. I didn't want to hold you too long. I wanted to keep it, more to the point. We've done good. Is there kind of anything else on your mind right now? Anything you're looking at? Just in general.
I think in general, you just want to kind of be aware that there's still a lot of stuff going on with the FTX scenario. And I think, even before FTX, there was I believe I remember that the government was holding like 150, I don't know if it was how many Bitcoin, but just be aware that these type of stress scenarios will create situations where there's going to be forced selling in crypto. So there's going to be a little overhang for now. And it probably is what forces it down to 13.8 or 12 or 13 or maybe 9,000. So just be patient, but at the same time, maybe layering in dollar cost averaging slowly is a way to start to get exposure. For people that are in at much higher levels, I would just say at this point, I don't know if it makes sense, unless you're doing the accounting type stuff we discussed. I don't know if it makes sense to exit, because you're probably relatively close to the end, but just be ready for Bitcoin to make you feel like it's going to go to zero. That's the way the market's bottom. It's going to tempt you. It's going to make you feel. But the bottom line is too, and this is really important, is that you shouldn't, if Bitcoin goes to zero tomorrow, for me, I would lose about $150,000. Would it affect my life? Not one bit, right? So you have to look at it like that, where whatever you have invested, if it goes to zero, it's not going to affect you. And that's where the heart rate we were discussing comes in. It should, it sucks. I don't want to lose 150K at this point, but at the same time, it wouldn't make me be in the poorhouse, and it wouldn't make me I wouldn't be living on the street. And
that's
any
why you're
investment
successful.
you make should kind of be in that scenario.
Absolutely. That's why you're successful. You can afford to lose it. I think if you're in Bitcoin long enough, I know you're not in the same realm as me of kind of just in crypto. I don't recommend this, but I think if the longer you're in it, you get more numb to, because obviously you see these large swings, you're more used to it. I think what it is also is you've heard that Bitcoin is going to zero so many times. Realistically, and you're welcome to disagree, Gareth, but realistically, it's past that point. I think it's past the point of failure. It very well could go down and stay down, but it ain't going anywhere. The network isn't going down. That was very realistic at some point. And every single time we have seen a bottom, I have been told, one, it's going to go lower. The numbers, they start getting scarier and scarier. And then eventually they stop coming and you get a big move up. And it's all about being in that right mindset.
I definitely agree with you on that. And I think that's the key, is that, and again, just to be clear though, that doesn't mean put all your money in.
Oh
right?
yeah, please don't do what I do.
You got to be a solid investor, diversified. I mean, even if you're just in crypto, you have to figure out how you're diversifying. How are you protecting yourself in crypto during this bear market? Because there needs to be some strategies there that are employed. Because again, we don't know. I mean, who knows what Solana goes to? Who knows what Avalanche? I mean, there's so many coins that are just at scary levels these days, and we just don't know. I think Bitcoin and Ethereum are the sure bets that they survive. But if there's one thing I've learned in investing, nothing is 100%.
Yeah, right. Be prepared to wait. And it's so cliche, but never invest more than you can lose. Never invest more than makes you uncomfortable, right? Like all of my wealth came from having crypto over like 6 years, whatever. I have to start saying 7 soon. Or maybe I do have to start saying 7. I don't even know. And the money I have is like, it started with such a small amount. It's grown. And so I guess for me to see it go back to being a small amount, I don't want that to happen. That wouldn't feel good, but it wouldn't really feel like I lost anything. And so I think that kind of sidesteps a little bit of that for me. I don't recommend, please guys, I don't recommend you go all in on like 100% crypto portfolio. It's stupid. Happens to be mine, but that's like how I got here. It's very bad for your mental health. And all this has really been about keeping your mental health positive, keeping it healthy. It's very hard to do. Like Gareth said, if you put all his money on one trade, of course he's going to get emotional. That's really the same concept as putting all of your capital in one asset or one asset class. It's really the same thing. It's going to be harder. Don't make it harder. Make it easy for yourself. That's my
and part of it too is life, right? I learned this early on. And by the way, I want to be clear to everyone that like the only reason I'm at where I am with knowing about diversification and like, okay, the odds and this is because in my early years, and I've done this for so long, I did everything wrong. I made every mistake that everyone else. I put all my money in a small stock and like it went to zero and I lost it all. And then I had to build up again. So it's coming from knowledge of actually screwing up that's made me finally learn. And by the way, I didn't learn after one time. Like I made mistakes like 10 times before I finally learned. So no one should feel like they can't learn this stuff and get to a point, but certainly make sure you understand that investing is a slow game. Like the leverage in crypto, it was great in the bull market. Now you get wiped out in a split second with leverage. So think about slow and steady really does win the race. And that's how I built my cash hoard and my money and my wealth, is that as soon as I learned that, then I actually started to make money, because it's all about compounding, right? Just like compound interest, all right, maybe you're only making 25% a year in your portfolio, but every year that amount of money you're making 25% on is bigger and bigger, and it just kind of it compounds. And so slow and steady really does win the race.
That it does. Man, it's been great having you on again. It's funny it's in the other scenario now, but I am happy to hear that you're scaling back in. These were things you weren't, that's what I was pointing out to the crowd. These are things you weren't saying last time. You were right about the direction of price last time. I'm not saying do whatever Gareth says. I'm sure Gareth doesn't preach that either, but pay attention. This is how I learned everything, is pay attention to the people who've been in the space. Doesn't mean just listen to them, do word for word what they say, but just pay attention to their rhetoric. How do their opinions change over time? How are their what's their emotional state versus yours? These are really important things I think people don't really pick up on. And it's really great to have you come share that, Gareth, all of your info. I think we're going to wrap it up, right? You guys should follow Gareth. I'm putting his Twitter in the chat. His YouTube link is in the video description. Subscribe to him. Great dude. Expert, goat, trader. We all have something to learn from him for sure. So thank you for being here, Gareth.
Thank you so much, Tom. Honestly, a pleasure. I hope we get together in a couple months again and we do this again.
Well, hopefully we'll be cheersing, because we'll be making money then. But
that's right.
Right on, man. Great to have you. Thanks for joining, guys. Jump in the Discord, subscribe, like, check out the sponsors links in the video description below. Subscribe to Gareth. I will catch you guys soon. Crown out.